Hello friends, this is Reddy from Wealthy Options. Welcome to 0TT Pulse. Today is 12th June. It was a nifty expiry and it was a tough expiry. Let's deep dive into what happened today. From underlying point of view, Nifty tried to break the last 1 month consolidation period on the upside. So it's fourth day in the row. It tried to break out, but today also it faced a tough resistance. And later we know that Nifty fell by almost like a 300 points. I think around 300 points from the day high. And so from the opening point of view, it was not a kind of a big gap up and all. It was just a around 30 points gap up, and in the first 5 minutes itself, the gap is filled, and then Nifty started going up in the next 15-20 minutes. So it was steadily going up, and then the premium also started decaying slowly. But then from 9:35 onwards, so Nifty started selling off, and it sold off about I think 100 points, close to 100 points in 10 minutes time, especially this second candle. So it broke the day low, so that is when IV started shooting up. So from the premium point of view, ATM straddle premium, Nifty ATM straddle premium closed around 147 yesterday, and today it opened about 127. So which means around it opened with a 20 points of overnight decay, but by 9:16, for those who wanted to short the straddles, I think at 9:16 the premium was around 115, and 9:17 it was around 100 rupees. So those who would have sold it at 9:16, 9:17, they would have got the straddle combined premium of between 100 to I think 110 to sort of 115. That's the levels. So that was a sort of a decent premium. I won't say it's a very good premium or very bad premium, but given the volatility on these days, we would need at least 120 to 130 kind of a premium. But so that's what we got. But then in next 1 minute, the straddle premium shot up by 15-20 points, which is not very bad, which is okay. And then so as Nifty started consolidating, started going up steadily, so the premium also cooled off to 100. ATM straddle cooled off to almost 100. So when Nifty started falling, so that's when and especially when it broke the day high, so straddle premium shot up to 136, which is from the straddle premium low, it's almost like a 36% rise in the straddle premium. So when this fall happened, so initially during this when Nifty started moving up, especially some of the strategies with less stop losses and all, those started suffering. And then during this fall, but I had a majority of the calls during this fall, so I think majority of the puts have taken out. So all the put stop losses have taken out. And then what happened is, rest of the day, the Nifty was started forming a formation of lower highs and lower lows, lower highs, lower lows, but it was not a kind of a steep fall, right? And especially if you look at this candle, I was looking at when you look at the daily charts, you will understand that. So this was the one of the high that was broken, and 25,000 is also a psychological support. I thought this will act as a support, and couple of times Nifty came to this particular level and tried to take the support, okay, and finally at some point of time it gave up that level, and I'll talk about what happened there. So during this period, right, so whenever Nifty was trying to break day's low, so we saw a IV spikes like straddle premium raising by anywhere between 10 to 20%, right? And so honestly speaking, till 130 literally there was no considerable decay, right? So when it went to 136 points here, so yes, from 136 it came down to about I think 90 levels and all. So let's look at here. So it's almost like a 90 levels. But then after that, so the premium did not fall at all. And not only it did not fall, so the problem was those who are selling the straddles or strangles throughout the day, based on conditions or time based or whatever it is. So when your strategy enters, and immediately after 5 minutes or 10 minutes, if you see a straddle premium spike of almost like 15-20%, so then what happens is, so either on the put side or call side, first stop losses will hit, and then the reversal will take out the other side stop losses also. So the challenge was there was no decay until 130, right? And though some, you can see some kind of small decay happened, but it's not a linear, it's a completely a non-linear decay, and especially when the market is also falling, so it's very difficult to it's very difficult for option sellers, right? And some of these IV spikes are pretty sharp, and if you look at this one, so it's from 62 to 85, right? So that's a 30 points, which is like more than 30% quick sharp up move. So these are kind of a tough moves. So during this period, as I said, by this time I was left out with only the calls. Very, very few puts, and that puts also were taken out during this time. After that, I did had IV shorting strategies, at different times, both in the morning and also the afternoon times. So, but the problem is when your IV shorting strategies, gets kicked in, and they start taking the orders. So we expect the theta decay, but that theta decay did not happen. Instead, IV was spiking, up and down, so till 130. So as a result of that, many of my strategies, which entered the positions even from after 10 o'clock till 130, they couldn't able to capture much of a theta decay. And especially when Nifty was trying to break the day low, whenever it was breaking, we saw that puts were spiking like quickly. They go to 50 to 60, 65, 70 rupees, and hits the stop loss, and then come back, and then they go after the call. So that's how the day was. But till this time, I think it was not a big loss or something. I think my account was it was somewhere in the 0.2-0.1%. In fact, before this move came, there was a this slow decay. It was not a steep decay, slow decay. The strategies were trying to capture the decay. Account also came into flattish to slight green, but then we got this bouncer. Nifty gave up the day's low. Not only it gave up the day's low, I think from here, so it straight away fell 200 points, from 25,050 levels to 24,826, continuous fall of 200 points, right? So this resulted in a IV spike of about 30%. So what happened is, whatever the positions which were kind of trying to capture the decay and trying to recover the morning losses, so they all started getting into the red from here. So because of this, and the puts were this particular fall, it was sudden actually. So puts, I had some slippages in some of the puts. So as a result of that, the losses jumped to kind of 0.75 to 0.8%. So that was the loss. And then so during the afternoon, so as I said earlier, I did had some of the regular strategies with different SLs, and also the IV shorting strategies to capture any of the IV spike. But what happened is, some of the strategies were with the big SLs and some with the small SLs. So those with the small SLs, they were though they took the hit on one side, so but they were profitable. It's not a big profit, but they ended up in a decent profit. But those with a bigger stop loss, as the Nifty continued to fall, so they couldn't withstand that fall, and they kind of resulted in a almost like a bigger losses actually. So as a result of that, there was a hope for recovering some of the losses from 0.8 to 0.85% to 0.65%. But then this reversal also took out some of the calls. So from then, so I had few entries which whatever they entered, the 24,900 straddle and all, they were able to recover a bit of a loss, but not much, because these calls, during this fall, so they almost, gone up to 3 rupees, 4 rupees, 5 rupees and all. So there was nothing much to capture, and there were no puts. So without having, both calls and puts, it's very difficult to recover the loss of kind of 0.8 to 0.85 percentage. So at the end of the day, I took a hit of, this account ended with 1.25 lakhs loss, and this is a small account, but traded aggressive strategies. This is the account I'm still continuing to trade some of the aggressive strategies. This took a beating of almost like a 50k, and my other account, this ended up with 1 lakh 14,000 loss. So overall, so it's a loss of so I think about 2.85 or 2.87 lakhs, so which works out like 0.69 to 0.7 percentage on my account size. So what is important today is yes, I mean, so when you have a direction, the challenge with the afternoons is if you have a small stop losses, so that will hit you both sides. But if you have a bigger stop loss, and when you see a big kind of a direction, and especially with the slippages, so you will suffer big losses. And even if you want to counter the any of the premium spikes, so I mean, I kind of have a counter premium IV shorting spikes, both with small and big stop losses, because I mean, if one fails, the other will be able to capture some profits. Today it was a tough day, mainly because one is we had a directional move coupled with the premium not falling, right? So this, up to here it was okay, but later this particular fall increased the losses, because afternoon mostly most of my strategies have bigger stop losses, right? So when bigger stop losses hits, and especially another point, I mean, I forgot to mention, so when my entries were happening, most of the entries, so they entered with a skew. So when I say skew, I think the puts were probably, I think 45-50 rupees, and calls were with 25-30 rupees. And unfortunately, I mean, stop losses bigger when stop losses hit on the side where the skew was more. I mean, the puts had higher premium at the entry, and when you have a stop loss on top of that, so the loss was more. Overall, it was tough for my strategy setups, especially whenever you see no decay or very less decay with the big moves, it's really challenging. So unless you enter into some strikes, and after that market cools off, gives you the opportunity to recover your losses. I think that's pretty much I wanted to cover in this episode. So just give a thumbs up if you like this content, and with that, I mean, I'll see you in my next episode. Bye.